Hey everyone, welcome back. So we got to talk about what's going on right now in the markets. Bitcoin's up. Another bank has just failed, which is unheard of that we've had three banks fail in such a short period of time. So this is Signature Bank that failed this time around. We also have the USDC stablecoin now getting back to the peg of almost $1. It's at like 99 cents something. So we got to talk about that. We got to talk about Bitcoin and the banks, but you guys know the drill here. Not financial advice for entertainment only. Do your own research. I'm investing in coins and companies. And let's get into Bitcoin, see what's going on here with this. So take a look at this. Bitcoin right now is at 21,950. It is up right now approximately, well, it's up 6.46% currently on the day. It's up 1,329. The RSI is still looking pretty good here on the day. If we look at the 4-hour chart, it's looking pretty good here as well for the RSI. On the 1-hour chart is what I really love seeing. RSI went way up here to 82, which was at that point, the price of Bitcoin was at 21,384. We did come down a little bit along with the RSI. Then we came back up in price, but the RSI didn't go above that line, which is a good sign, which means that we are definitely pumping here, which is good. And this might be a trend reversal a little bit here. Next, if we look at the Bitcoin CME futures here on the daily chart, we can see here that we did fill the gap. We now have a new line popping up here, which was on today, and that is way up there. I think since we filled these gaps, we don't have to worry about this gap that was created here, as we've already been through this part of it, okay? So that's good news there. Ethereum also is up nicely. It is up right now 7.1%. So with everything that's going on with the banks, well, collapsing basically, 3 banks in the last week and a half or so, are people moving their money, their dollars over into crypto right now? Because this is just really unusual that we're seeing this with banks collapsing right now, okay? Maybe the thought process is with the banks going under, the Fed is going to be less likely to raise interest rates going forward. We might get another 25 basis points this time around, but the next time they're going to be definitely thinking about what's going on with the banks and everything else. So let's get into what's going on here with also USDC really quick. USDC, we can see here is at 99.22 cents. So it has definitely came back to where it should be, being pegged to the dollar. And that's a good sign there. We did hit a low on it of about 94 cents, which is when it kind of depegged a little bit. The concern there was obviously Circle had about $3 billion worth of deposits in with Silicon Valley Bank. That freaked people out, and that's why it depegged from there. After that, Circle did come out and state that they will make sure that the peg maintains. And I think that kind of helped out a little bit here. And then today, just as Bitcoin is pumping, so has USDC has kind of gone up nicely from 96 all the way up to 99 now. So that's good news there. Okay, let's talk about the bank that has actually failed here. So crypto-friendly Signature Bank shut down by state regulators. Signature said it intended to limit its crypto exposure last year. I have an article from that as well, so we'll take a look at it and what they were dealing with. But here's the story so far. New York-based Signature Bank, which has a number of crypto clients, was shut down Sunday by state regulators, the Federal Reserve announced. In a statement, the New York Department of Financial Services Superintendent Adriana Harris said the Federal Depository Insurance Corporation, FDIC, had taken receivership of the bank. This marks the third bank's collapse in under a week, following Silvergate's bank voluntary liquidation and Silicon Valley's bank shutdown on Wednesday and Friday, respectively. Harris said the action was taken to protect depositors. Okay, so that's fine that they took this, but what was the cause of it? Is it also that they had a lot of long-term bonds that they were holding on to, U.S. securities, whatever it was for long-term? Is that what's causing this problem here that we've seen so far, possibly with Silicon Valley Bank and now Signature Bank? So a joint statement from the Federal Reserve, FDIC, and the U.S. Treasury Department said all depositors who use Signature would be made whole. In a joint statement outlining actions the federal regulations would take to protect depositors in SVB. So that's good there. Signature Bank is a New York State chartered commercial bank and is FDIC insured with total assets of approximately $110.36 billion and total deposits of approximately $88.59 billion as of December 31st, 2022. So they had a boatload of cash on the books, it looks like, but where was that cash held? That's the question. Harris' statement said, DFS is close contact with all regulated entities in light of market events, monitoring the market trends, and collaborating closely with other state and federal regulators to protect consumers, ensure the health of the entities we regulate, and preserve the stability of the global financial system. Okay, that's all fine and dandy. We are also announcing a similar systematic risk exception for Signature Bank, New York, which was closed today by its state charting authority. All depositors of this institution will be made whole. As with the resolution of Silicon Valley Bank, no losses will be borne by the taxpayers. The joint Fed FDIC Treasury statement said The move came mere months after Signature announced it would be reducing its exposure to the crypto sector. So my only question with this one is why is, well, the FDIC taking over it? Is it because what's going on with their books? Is it that they have a lot of bonds, or what else is it? T-bills that they are, out for a long period of time and they can't access those? Is that the problem? Because the Fed has been raising interest rates and banks went to the safe havens? I don't know. So that would be nice to know in detail instead of just providing all this stuff here, which is still good, but more details I think would be better. Okay. So that's just my question on that one. And let's take a look at Signature Bank here really quick, what they posted here in December. This is from December 7th. So Signature Bank reduces crypto exposure by 8 to 10 billion. After receiving significant growth from accepting crypto deposits, Signature Bank recently announced at an industry conference that it would reduce deposits tied to cryptocurrencies by 8 to 10 billion. The move comes in light of falling token prices and the FTX inflicted turmoil in the cryptocurrency market, which has also resulted in significant price volatility for SBNY. As of November 14, 2022, Signature Bank's deposit balances in the digital asset space amounted to 23.5 billion, or roughly 24% of total deposits. So that was a lot there. No, I'm not surprised that they wanted to get that down a little bit. The company previously noted that it only has a deposit relationship with FTX. The crypto exchange's deposits made less than 0.1% of the company's overall deposits, so that's good there. So they didn't have a lot of coverage there. Let's see here. Signature Bank is one of the only federally regulated U.S. banks known to have accepted large-scale crypto deposits and crypto exchanges, stablecoin issuers, and Bitcoin miners as customers. These helped the bank scale its deposits in the past. However, the crypto value's erosion from the November 2021 highs, the recent liquidity crunch, and the FTX bankruptcy have contributed to weakened investor confidence in the digital asset space. Shares of the company have plunged 63.3% year-to-date, underperforming the industry's loss of 17.3%. And that is why they were definitely looking into possibly getting a little bit away from that sector, at least reducing the amount that they have exposure to it. That's what I'm trying to say. And here, hence the bank's move to eventually reduce digital assets related deposit exposure to less than 50% and exit stablecoins as a business will help shift investors' focus from this crypto-related business. Also, SMB and WAD plans to cover the aggressive reduction in deposits by reducing cash and increasing borrowings. So is that what eventually was their demise? I don't know. We'll obviously find out in days to come when more information on this comes out. So it's another one that hits the dirt here, unfortunately. 3 banks in a row. Is there more coming? I have no idea. But here's SMBNY stock. It was trading at $70 at the end of Friday. So it's still up pretty high. It was definitely lower than where it was just a year ago. On February 1st, it was at $344. So it has come down quite a bit here. But prior to that, with the rally that we did have coming up, it did spike here and it came back down. But it's still right around the average where it was prior to that. You can see here in September 1st, it was around 114. Now it's at $70. So it's a little bit off of that, but still not that much. Nonetheless, it went under. I'd love to know the details as to why it went under. As far as will there be other banks that go as well? Time will tell. I think we may have a little bit of bank run happening this coming Monday, Tuesday, and Wednesday, unfortunately, in some of these banks. People are just going to be freaking out, especially the ones that have a lot of payroll, things like that. They're going to be pulling everything that they can from some of these maybe smaller banks into these larger banks potentially. I don't know. We'll see. But it's definitely going to be interesting to see what happens with Bitcoin. Bitcoin right now is still, I believe it's still going up quite nicely. Let's see. Yeah, I mean, it's right now 22,000 right now. So it's still way up there. So we'll see. We'll keep an eye on it. We'll keep you guys posted what happens in this space. We'll see if another bank fails. And like I said, it'd be nice to get more details as far as why the banks are failing instead of just we're taking over and that's it. Okay. So that's it. I hope you guys have a great Sunday. I was going to do another video on something else, but this obviously took precedence a little bit here. So I'll probably do something else coming up here in this week as well. All right. Hope you guys enjoyed it. Hit the like button, subscribe. Helps me out. And I'll see you guys in the next one. Bye.